Now, here are three things you need to know right now. Another rate hike incoming. The Federal Reserve is expected to announce another 75 basis point interest rate hike today as white-hot inflation continues to climb. Let's head to D.C., where Yahoo Finance's Brian Chung is standing by ahead of today's announcement. Brian, really enjoyed what you wrote about the Fed meeting today in the morning brief newsletter. Walk us through it.
Yeah, well, it's kind of like landing a plane, what the Fed is trying to do this morning. But, of course, all eyes on that 2 p.m. announcement. So let me just break down what we need to watch for as the Fed tries to land that plane. Let's call it our FOMC3, the three things I'm watching. The first thing that I'm watching, 75 basis points, right? I mean, we didn't know what was going to happen before the June meeting when they abruptly moved to 75 basis points instead of the message 50 basis points, although markets are getting the message that the Fed unlikely to do a last-minute switcheroo because market pricing around 75% chance that they'll follow through on another 75 basis point hike, which brings me to my number two question. That means that interest rates would be somewhere around 2.25% to 2.5% if they follow through on that later on. The next question is, can we get much higher than that? The question is, how much higher does the Fed need to raise rates before at some point maybe a recession forces them to start then cutting rates? Now, you have a lot of estimates on the street. Goldman Sachs saying 3.5%, Deutsche Bank saying 4.1%, the Fed itself messaging at the end of the last meeting that it could be as high as 3.8% next year. No one really knows. We're going to have to hear from Jay Powell in that press conference at 2:30 for what he says could happen in the next few meetings. But, of course, my number one question is not about the nuance of the number or the neutral rate. It's really all about the R-word recession. That's going to be the big focus after we get that print on GDP, which won't happen until tomorrow morning. 2 negative quarters of GDP, does that constitute a recession for the Fed? Does that definition matter? That's something the Fed chairman is going to have to answer. We'll have the press conference at 2:30, statement out at 2 p.m. We'll have all of that coverage right here from a very hot Washington, D.C., guys.
I should have known that we could count on you for a Kanye West reference as well here with Can We Get Much Higher there, Brian? So, even as we're going into the announcement, but then additionally the press conference, as you mentioned, what's the question that you want to get through to the Fed and to Federal Reserve Chair Jerome Powell?
Yeah, well, I think the big question is, what does the labor market look like right now? Of course, we're all concerned about that 9.1% inflation read that we got in the month of June on a year-over-year basis. But the real question for the Fed in trying to avoid a hard landing as they try to land that plane is avoiding any sort of substantial uptick in job loss. Now, right now, the unemployment rate is very low. It's, in fact, right essentially back where it was pre-pandemic. But the Fed is a little bit worried that as it starts to hike interest rates, as company margins get a little bit smaller, do companies then start to have to lay off their workers? If that happens, that could really accelerate the downturn that people are worried about. Could unemployment take up to 4%, 5%? Maybe even higher than that. Some economists are saying that's what's necessary to take inflation and economic activity down. So I think the big question is, are you starting at the Federal Reserve to see any sort of job loss? Is that a concern that says maybe this plane might have a bit of a bumpy landing?
Brian, how closely do you think the Fed watches corporate earnings? Because like we mentioned at the top, you had Walmart come out here and warn about a consumer spending slowdown. Microsoft, Google, I would say they warned on their conference calls last night. It is not pretty right now in corporate America.
Brian, I'm not going to ask Jay Powell about what he thought about Walmart earnings.
You should.
I mean, I could try.
You should.
But
That's
I don't
the
know
question.
If he's going to bite on that one. Hey, look, at the end of the day, I think you're right. I think he is going to be paying attention to corporate earnings because, again, the part that I just described, those large employers, and they've actually gotten larger in terms of the employment base of America over the course of the pandemic, they are going to be so critical to that question of how many people are going to have to lose their jobs to take the economic, kind of pace that we've been going at post-pandemic down a notch that would take inflation down as well. Now, the Federal Reserve, for its part, says we don't have to make that trade-off. And the reason why is because the high demand incentivized a lot of these companies to put more job postings out there. Maybe in many cases, they never filled those job postings, right? You see the JOLTS data showing continued elevation in the amount of job postings that employers simply can't hire. Maybe they just take those postings down on LinkedIn or Job Recruiter or what have you instead of start to lay people off. But again, you're hearing anecdotes. You look at Shopify just yesterday. You're looking at in the big tech sector, a lot of other layoffs as well. Maybe that's already starting to happen.
Yahoo Finance's own Brian Chung. He's going to be tracking all of the movements from the Fed that comes out today, as well as throwing a few questions their way a little bit later on during the presser. Brian, thanks for joining us here this morning in Washington, D.C.